So today's technical analysis is going to cover a couple of sectors. We're going to talk about uranium, we're going to talk about oil, we're going to talk about gold, and we'll see what else we get into. But our first chart of the day is their LEU. That's for Centrus Energy. Super bullish on this company. They've got a market cap of $614 million. And they are tentatively, I mean, they are right now the only company in North America that produces HALEU fuel. They'll be responsible for providing all of the fuel for all of North America and a lot of Europe. There's only one other country on the planet that does this, and they're a Russian company, and they do most of their business with China. So take that for what you will. For me, I see nothing but upside in this company. I don't know how you stay around $614 million for very long. I don't think the market does either, because you can see since December of 2018, it has done nothing but go up from a bottom of $1.37. So you can see quite clearly a massive trend here. And there's more than one trend. Not only do you have a perfect parallel channel here, which is very nice to see, you also have consistency in sell-offs and buy zones. Okay, so this is the daily chart. And you can see from peak to trough, we had a 58% sell-off and then a big move up, and a 59% sell-off and a big move up, and a 59% sell-off and a big move up. And then you had a 32% sell-off, but this really wasn't so much of a sell-off as it was a consolidation period sideways, building momentum and energy for the next big move up here. And then, of course, how much did it sell off from there? 59%, 60%. So that's why this was such a clear buy zone. Okay, it was a no-brainer buy zone to pick up more here and add to your position, because if you actually zoom out and look at this on the weekly chart, look at this. Not only did we hit the trend line, but we hit the 50 EMA on the weekly. So you had a double confluence of support right here. It's easy. But by itself, maybe that's so much. Let's look at what it's done historically, right? Well, the last time it had a massive leg up, it started by bottoming on the trend line in the 50 EMA. What about the time before that? Oh, same thing. Right? What about before that? Oh, well, it did break through, but it did stop at the trend line and move up. Okay, but there's more confluence than that, because if you look down here at the RSI, this is the relative strength indicator. This doesn't tell you what's going to happen or anything like that, but it is helpful. Okay, because it is telling you how overbought or oversold it is by measuring the buying and selling volume over time, right? How much is occurring at once, and it's telling you if it's overbought, if it's kind of due for being sold, or if it's oversold and it really is just begging to be bought. So it's not telling you what will happen, but when the rest of the chart is painting a picture, you can use this in conjunction with it to kind of confirm a bias. And most of the time, if you're using it to confirm a bias you see without it, it really does help a lot. And that's what it's doing right here. Because the RSI on this company, since it's taken off on this bull run, it doesn't like to get below this, say, 45 zone, okay? And every single time it's taken a major leg up, it has done so not only from the double confluence of the trend line and the 50 moving average, but also from the RSI at about 45. And guess what? Three things happened right here, right? So that's easy peasy. This is easy peasy. But it's not just here, okay? So this company has a sister stock. They're unrelated, other than they need each other to produce this product, right? But I don't think they're owned by the same people or anything. But that's Lightbridge. Okay, look at this. I mean, it couldn't have been an easier buy. I bought here at 550. Okay, I bought it right there on that trend line, and I had to stick with it. Let me go back to the daily. I had to stick with it for like 2 days or 3 days, but it's all been green ever since then. And all I did was buy the trend, and the trend is up. So when you get afforded the opportunity to buy these trend lines, you have to take them, because we know that the sector as a whole is so bullish, right? So you have to use this to your advantage. Once you've identified something that's so bullish like it is, then you bring in the charts. And the charts will help us figure out when and where to buy. So in this particular example, where LEU produces all the fuel itself, all the HALEU, these guys are actually going to be the ones making all the fuel rods themselves, right? So the market cap on this company is $51 million. Okay, so I just want you to understand, just as an example, let me show you something. Even if you have no investments made yet, even if you're late to the party, I'm going to show you how early you actually really are. Because consider March of 2020. That's when everything was at the bottom, right? Everything sold off. I don't care what it was, it sold off. And that was the best time to buy. So let's say you missed that right here on this one, okay? The price from trough to peak, it went up 750%, okay? And from that high, that recent high, it fell 66%. Look, do you not see how volatile this is? It's got a 400% move up before 70% move down, before a 330% move up, before a 57% move down. It's just volatile, okay? Because commodities are volatile. I mean, the volatility in commodities are the original Bitcoin, right? I mean, it's always been this way, and you have to understand part of it's because not only is the equity itself such a small market cap, making it very easily moved, but the entire uranium space is super tiny. Okay, so when these big investors and these bigwigs come in with all this money, they can move the market really, really easily. So when they get in and make their positions and they start buying their tranches of shares, they move the market a lot. And on these big volume days, you can believe that's exactly what they're doing. They're getting in position. And so I just want to point out to you that, the market, it's going to move, 2 steps forward, 1 step back. 2 steps forward, 1 step back, right? 2 steps forward, 1 step back. That's how it's going to go. It's going to take breaks, but despite the fact that it's moved up so much from that March low means nothing because it's still so low. Because look at it from a zoomed out perspective. We're going to put this in a weekly chart. Look at how much upside there is. Even if this company fizzles out and fails, all right, so bought at 550, that was a buy price, remember? If it only hits this trend line, that's an 87% profit right there, just that fast. I mean, if and when it hits that, it'll be relatively quickly. If it hits the next major trend line, that's a 467% move. You understand? It still has that much room to go just to hit its major trend line, and it's almost assured to hit that trend line, right? And once it breaks this trend line, you're breaking the downtrend, okay? So you're starting a brand new uptrend, and from there it's just blue skies. I mean, this, it could get silly really fast. So, but sometimes all these numbers over here, the $20 a share or whatever, gets people a little off track. It's better to think about it in terms of market cap, and being at $50 million market cap, it is not unreasonable at all to see it maybe go to $60, right? That's just a 10x. So, or 70. I mean, it's just not unreasonable at all for it to just skyrocket from here. So don't focus on how much it's gone up and how much you've missed out on. Focus on how much there is left to get, right? Because there's a lot of meat on the table still in all these stocks. And look, they're all trading the same way. So we looked at LEU, right? Okay. So now look at Nexgen. I mean, look, it's the same chart, man. It's the same thing. So that recent buy zone at LEU, you hit the trend and you're up a little bit. Right? Hit the trend, you're up a little bit. Hit the trend, you're up a little bit. I mean, the sector is trading together, and this sector is fundamentally bullish. So when you understand that, you just identify these buy zones and you buy it, and you just leave it alone and stop trying to trade in and out of it. Just leave it alone because it's going up. That's all you got to do, right? Once you've identified a bullish thesis, the hard work is done. That's the hard part, is figuring out what's going to go up. Once you've identified it, just buy it and leave it alone. Right? That's all you got to do. And that's why people lose so much money, is because they trade too much. They get it in and out and they keep trading and keep trading. Just leave it alone. Right? That's all you got to do. But this whole sector looks super bullish. Even look at the confluence in Cameco. I mean, it just looks so good. And honestly, the best way to get exposure to the uranium price, which, by the way, the value of these equities are directly tied to the value of the commodity itself, which is uranium, right? Uranium's at minimum half of where it needs to be, right? Half of where it needs to be. So there's still a doubling up left to occur in uranium. But like most commodities, it's probably going to overshoot where it needs to be. I mean, oil does it all the time. You know, if oil needs to be at $80, it's going to go to $100, right? Until $100 fixes $100 and it goes to 80. I mean, it's just what it does, right? This is how this stuff works. So the idea that we only have a 2x left in uranium is just silly, because the leverage on the equities is 3x, you know, already. I mean, we have so much upside left that you really want to get in. And Sprott is a perfect example of a great company to get in without a lot of risk, because companies like LEU or Cameco, they are going to be volatile, and a lot of people don't have the stomach to sit through 10% moves in a day. A company like Sprott Physical Uranium is going to be a lot less volatile, because they're directly associated to the price of uranium itself. Because what they do is they actually buy uranium off of the market and then they just stick it in a warehouse, right? So if they own 1 million pounds of uranium and the price of uranium is $2, then they are worth $2 million, okay? So anytime their market price, their market cap is below $2 million, well, now they're trading at a value, right? And you should be buying it, right? Because it's just kind of free money sitting there. But anytime they're trading above that, they're trading at a premium. And because their management fee is 1%, once they're trading over 1%, they take all that premium that they have of their value and they go and buy more uranium. Okay, so this is important to understand. This is why this equity right here, this trust, is really what it is. It's a trust. It's not going to be quite as volatile. It's going to hang around. Look, this $11 price has been like a magnet, okay? It goes below it, it goes above it, it goes below it, it goes above it, and it's just less and less every time. It's just hanging out here at 11 bucks, okay? Because it's equalizing with the price of uranium. But the price of uranium is destined to go up. The thing about it is if the price of uranium doubled today, well, the price of Sprott would double today. But it's going to do more than that, because by the time the price of uranium doubles, well, they're going to own a lot more uranium than they do now, right? So this isn't going to 2x. This is going to 4x, right, or 5x. I mean, who knows? I mean, it's got a long way to go, and it's the safest way to play it. So if you're worried about downside and riding a bunch of volatility and you don't want to see your account move all over the place in either direction, but you want to be in uranium, this is the one to buy, okay? It's the safest, and it still has a lot of upside to it. Now, if we switch gears for a second, look at something like gold, which I'm pumped about. So we're finally breaking out. This is a big deal because not only are we breaking out, but so far we've managed to come back and retest and come back above. We'll see how that pans out. This is a weekly chart. We want to see a few more candles to see what happens, but it's going in the right direction. And you have to understand that this pennant is actually the handle on a much larger cup and handle pattern. I mean, look at this. Look at this. I mean, it's massive. It started all the way back in 2011. It's textbook. Textbook. So the way you trade this is that you have your peak and your trough, right? So you have the height of the cup. We'll be conservative and say it's the left side, down to the trough. All right. So that's $862. So once it breaks out $862, it puts us at a gold price of $27.50. So once we break out of our wedge, that's the target's $27.50. which is substantial in and of itself, but it's also a big deal for all these miners. And the best way to explain it if you don't understand is that take a silver miner. Let's say for the sake of numbers that the price of silver is $10 an ounce. And a miner is mining this silver and it costs them $9 an ounce to get this stuff out of the ground, okay? So they make $1 an ounce. Well, if the price of silver goes up to $11, well, the move in silver was only 10%, but for the miner, he just doubled his profit, okay? So this is why it's so important, because, you know, oil went through a patch where they had to become deleveraged. They had to fix all their debt. They became a lot more efficient in getting this oil out of the ground and all their processes and technology that it really helps fire off a new bull market in oil, right? Well, the same thing has happened in the mining sectors, especially in metals, because the metals went through such a long bear market that they got rid of all their debt. They have gobs and gobs and gobs of money just sitting in the bank, and they are already at all-time record profit. I mean, most of these well-established miners, these gold miners, they're all in sustaining costs. You know, it's $900 an ounce. Gold's $1870 right now, okay, and it's about to go up another $1,000. You understand how much money these people are about to make? You understand? Do you understand how much they're about to multiply in their value, right? So this is about to be absolutely fucking massive. You understand? About to make so much money on all these miners. So it's extremely bullish. It's one of the most beautiful charts in the entire market. It's one of the most bullish patterns you could ever find. It does have to actually break out before it's validated, but it couldn't have a better setup. Imagine gold going down to $1,200 from here. It doesn't even make sense. How is it even possible? It can't. It's going up. Okay, this is just what it's going to do, right? It's like the safest trade ever. So that's something to look at and pay attention to. I'm really excited about that. Oil is worth looking at too. So I always love looking at oil. All right. Oil is actually a bit overbought in the short to medium term. So if you look, what is this guy? If you look, you had a lot of Russian fear porn lately, really kind of stretched the price up kind of quickly. And as you can see, we are clearly hitting a trend line. And it's clear as day, and it's bouncing back off of it. Same thing that happened here, same thing that happened here. Oil has gone up for 1, 2, 3, 4, 5, 6, 7, 8, technically 9 weeks in a row. I mean, it's got to take a break. So nothing goes up forever. Everything has to kind of chill out and wait for a little bit. It does look like oil is oversold. A day doesn't make a market, you know, and anything can happen. But the odds say that it's about to sell off and take a break before ultimately turning around and much likely going higher. How high it goes is tough to say, but you can see that it's, look at also where it's stopping. This is a double confluence. So this is like what we're talking about in LEU. So not only do you have this upward sloping trend line, but you have this top. Okay, it's that 95.50. It's not gonna like getting above that price. Okay, because it's a lot of chop in here. Right, this is a lot of chop, and so oil is trying to reconcile breaking out and approaching all-time highs. And that's the thing. It's not so much the just the number itself, $96. It's the fact that it's approaching all-time record highs, and it's threatening to get there. So it's got to do it slowly, but it does look like it's going to happen. All-time record high, but 48. We probably will get there, but getting through this, say, 95 to what, $112 zone, it's going to be tricky. It's not going to blast right through it. It's going to take a minute, I think. So in the short to medium term, It's probably going to roll over and take a break. Even the RSI is telling you that it's overbought. It's due to chill out a little bit and gain some strength. Even if you compare it to oil equities, like we'll look at good old EOG. Yeah, I'll just do EOG. See, man, this looks great. And look at that. Look at that double bottom right there. It's just clear as day. It's just hollering at you. Bam, bam, and then it's playing out. So that's a beautiful, beautiful chart. It's also threatening its all-time highs at $1.33. So this is probably going to chill out with oil. It makes sense because even this is saying that it's overbought too. It's at the upper end of its trend line. So it stands to reason that oil is overbought right now. And it's going to have to take a break. EOG take a break with it. Let's assume we get that break. The next place to buy or add to your position, strong buy, is right there at 87.61. So you can set your 5% target right there, above or below. You don't know if it'll actually hit it. If the more bullish something is, the less likely it actually is to come and touch it, because people will be eager. Everybody's looking at the same thing. So even if you don't know anything about charts or technical analysis or supports, other people do, and they're all looking at this stuff. So, and once you understand that, it gives you an advantage. And that's why it's important to understand this stuff and not just guess at what you're doing or where you're buying. So EOJ looks good long term. Short term, probably going to take a break and have a little bit of a sell-off. And then this reminds me, I actually want to look at the oil gold ratio, or in this case the gold to oil ratio. So this chart is showing us the trend over time of how many barrels of oil it takes to buy 1 ounce of gold. And so you have a clear trend, and that started back here in 2008. Okay, so this is the great financial crisis. This is, everybody knows what happened with housing and oil and everything. So you can see with that crisis, it brought, it made oil very, very cheap when priced in gold. Okay. Even when the virus came, it did the same thing. It made oil very cheap when priced in gold. The common thread and common theme to this upward movement is crisis. Okay. So I think ultimately, what this chart is really telling us is that something big is coming, okay? Because you have to understand this is just a ratio, and you know the price of gold could double, and the price of oil could triple, okay? And that would make this ratio crash, even though the price of both of these things went up, right? So you can't look at it like that. Understand what the ratio is and what it's doing. I think what this is telling us, and I think the takeaway is, if this crashes down, it's telling us that oil is about to get really expensive. And I mean super expensive. But when you look at the other charts and you see right now, at least in the short to medium term, oil's already kind of overbought, and gold is threatening to break out of its cup and handle. I think what is more likely to happen is that this is showing a peekaboo, okay? And that's what I call it, when something breaks a trend line and it makes it look like it's crashing down, it's breaking the trend, but really it just fakes a bunch of people out and it turns around, right? Because incidentally, the RSI on this is also telling us that this ratio is oversold, okay? And what I think is most likely to happen is that maybe oil goes up to, maybe oil stays flat, I don't know, but I think gold is about to get really expensive compared to oil, or oil is about to get extremely expensive priced in gold. Excuse me, it's about to get really cheap priced in gold, because I think gold's going to go up substantially higher and faster than oil is in the medium to long term. I could have a bad read on that. It might be wrong, but it seems the most likely. And it's not telling you to buy one more than the other or anything like that. And this is not necessarily about a trade so much as it is what what the chart's telling you. Okay, because the market is pricing these things in all the time. Okay, and that's really what a chart is. It's you're looking at the emotion, and you just put the lines on there to help you see the trends and help you see the patterns, and you can come back to it and immediately spot it without having to find it again. It's just there's nothing magical about these things. They're just help you use your eyes better. What the chart is telling you, it's just showing you the range of human emotion and how people felt about a certain product at certain price levels, and to what extent. You know, what was the volume? How interested were they at this price? Well, not nearly as interested as they were at this price, right? I mean, this chart is telling you how people feel, and it's extremely valuable, and it's very useful. So these things help us a lot, and we're going to keep using them. So don't underestimate this stuff, and don't make fun of it, because it'll make a fool out of you. I mean, you want to learn this stuff and track it as best you can and as best you're able. But that's just kind of the crash course I wanted to do. It's the first time. I don't really know what I'm doing with this stuff, and I've never used it before, but I just wanted to check it out and see how it worked and see how it looked and see how it sounded. I probably should have done a test first, but I didn't. I just got in here and went for it. So we'll see. We'll see. I mean, it's my first time. I'm sure I'll get better as I do it, but there's no planning or prep. I just jumped in and went to it. So we'll see what happens. All right.